Pratik, could I request you to give me a call? I think we just figured out the issue here.
You said something?
Yeah, could you just give me a call? Just figure out what the issue is for people joining.
Yeah.
Thank you. I see some people have joined in. Thank you so much for joining in. We're just giving it a couple of minutes for some people to join. Initially, there were some issues with joining. So apologies for the delay, but do bear with us. We'll start very shortly. Okay, great. I think we'll continue to see some more people joining in. But let's get started. Sriram, thank you so much for being here, and apologies for the delay. I'll just quickly sign in with a quick intro and then bring you into the conversation. But thank you. I also saw some familiar faces and names from the previous round. So thank you for joining in again. Good to see you all again. It's been a bit of a hiatus, but welcome back to the latest edition of the Uday Knowledge Sessions, brought to you by Mumbai FinTech Hub and PwC. For some of you who are new to this, Mumbai FinTech Hub is the fintech vertical of the government of Maharashtra. And MFH is focused on the growth of the fintech sector in the state, with a key focus on building fintech talent for through an education program, which is Uday. And the way Uday is structured is it provides students like yourselves who are interested in pursuing such careers in fintech by giving you access to different forms of knowledge. We have a course. We run these Uday knowledge sessions as well, where you hear directly from industry experts on the basics of fintech concepts, as well as on the skill sets you need to excel in a career in the fintech space as well. And it's in this context that we're really excited to invite Mr. Sriram Kanuri, Director and CEO at Arteria. Sriram has joined us today to talk specifically about the increased convergence of supply chain, automation, and digitization with financial services strategies. Now, Arteria has been very heavily involved in this space. They've evolved their offerings in the space in terms of digitizing key ecosystems and also enabling the embedding of a number of different kinds of synergistic products and services within this larger ambit of digitization and value chain. And so it'll be really interesting to hear Sriram's take today on how this space is evolving further, and it really is the next iteration of what we're seeing in the fintech space. Sriram has over 20 years of industry experience and is a BITS Bilani alumni. He specifically has expertise in enterprise software, strategy, team management, and ERP. And we're really excited to have him today for the session. Before I hand it over to Sriram, just a couple of quick housekeeping rules. As always, we like to keep this interactive. So while Sriram will cover the core concepts in his initial chat, we suggest you send in your questions to the chat facility. We've already got some questions which we'd also feel for Sriram to look at. And then what we'll do is at the end of the session, we'll open up for a Q&A where you can send in your questions and I'll keep posing them to Sriram for his perspective. But without any further ado, looking forward to this being an interactive session. And over to you, Sriram. Pradeep, do you want to hand over presentation rights to Sriram?
Thanks, Avnish.
Yep, Sriram, we can hear you. Do you want to quickly try presenting and let's see if it shows up? Yeah, we can see your screen. Perfect.
Okay, great. We'll get going. I think thanks for the introduction, Avnish. Just a little bit more, and I don't know how many of you have. Did any of you see this picture of late here without reading the text? So this really tells us how important global supply chains are in today's world. This happened as early as a couple of months back, where a big ship which got stuck in a Suez Canal led to a losses or a global losses or damages close to $54 billion, which is not a small amount. So this really tells us how the whole world is connected today and how any small change anywhere in any part of the world can lead to delays or losses across the globe, across the countries, across various corporates. So I am just using this to emphasize on the fact that we live in a connected world. And just some small numbers for all of us. These are slightly older because I couldn't find the latest data, which is more accurate. But it really tells you how China, Germany, and Japan are key import destinations across a set of 6 sectors, and they virtually account for more than 50 to 60% of the global trade that is running across these 6 sectors, which is auto, cement, consumer durables, discrete manufacturing, paints, polymers, and pharma. These are the 6 sectors. And again, if you look at them in our context of our country, if you see where we are exporting, bulk of it, as all of us know, is going to the US predominantly in and around the auto components or other than software. UK in certain consumer durables, Belgium and Germany. And what I'm trying to emphasize here using the slides is today, any business, anything that we see is connected across the globe. It's a known fact. But all of us may not even realize the importance of such small components. Just to give you that same story of the ship which got stuck in Suez Canal, we had ordered about 250 laptops for our office, and there were some components of which could not be delivered in those 6 days. So my shipment got delayed by a month. So this is as simple as that. We live in a connected world. Uh, Beyond our imagination, even in terms of supply chains. Okay. So when I say supply chain, what do I mean by that? It's a very broad word, and I'm trying to hit upon this, using this next slide. So just assume that there is a manufacturing company. You have 2 sides of the story. One is distribution networks, and then end consumers like you and me who buy from them, maybe retailers, maybe distributors. Then you have suppliers who supply to them their raw materials, and then they buy their own raw materials, they process it. So this whole thing together in a broader word is what we call a supply chain. All of us know that. But the most important aspect which doesn't come out so openly here is anytime there is an exchange of a goods or a service which is represented by these arrows, there is a change of money from one hand to the other hand, which is a very simple logic. But we have run a company on supply chain for past 10 years, but it took us some external guy to realize that you're running such large supply chains. Why are you not looking at monetary aspects, because we are so embedded in one particular topic, we actually didn't bother to look at the money side of it. So there is huge money that changes hands in every part of the supply chain, that it, and the same money, for example, if I work with a manufacturer, let's take any big name that we want to do, for example, Britannia is one of our customers. So if Britannia is today doing a turnover of 15 to 20,000 crores, probably plus minus 10% delta, the same money gets exchanged hands about 3 to 4 times. Once when they sell to the distributor, another time when they sell it to the consumer, and then couple of times, if you remove their margins, when they pay their suppliers and then their sub-suppliers. So we are looking at a huge money flow, even if you look at one supply chain. And there's another term which all of us are used to here, or here at least, which is called as value chains. I don't know how many of you heard about it. Uh, Ideally, this is a term that got framed in one of these top business schools, and they really use it to say, okay, while we know suppliers are giving materials, but the value chain is the reverse of it, because it starts with customer satisfaction, right? And at every step of it, it leads to an improvement of money flow across the supply chain. So why am I talking about all these basics? Because what I'm going to present next, I'm setting up the stage for that. So if we see this, these are again technologies which all of us know here every single day, whether it is artificial intelligence, mobile internet, or big data, or Internet of Things, or IoT, cloud technology, 3D printing, etc. So we've heard about all these. We have utilized a lot more of these technologies as well, right? But how do all these impact our, supply chains? And in a way, the fintechs or the money associated with the supply chains is something which is very fascinating to know. I'll just give you a small example of, and this is a first-hand example of what I have experienced about 3 years, not 3 years, it's actually 2019 December, in certain cities in Atlanta in the USA. Amazon is experimenting with manufacturing using the 3D printing on the truck for some goods. So if I ordered a certain set of shoes, they get delivered as soon as you ordered, because they manufacture on the road. Now there are multiple technologies that can lead to this. One is 3D printing, the other is ensuring that the order and demand are optimized, etc. But this is supply chain for you, and supply chain and money for you in tomorrow's world, or 5 years from now. It is not something, it's very far-fetched. This is something which we are going to see in the next 5 to 10 years at best in most parts of the country, right? So now, having seen all this, how can any one of you participate or be a participant and beneficiary of such an economy? And how does this whole thing come together is what I would want to emphasize on in my next couple of slides. So while those are the technologies, we as a country, we know that we are talking about, if we talk about a $5 trillion economy, which is going to be in 2025. Even today, our GDP is around 5 trillion, may not be the whole economy as such. But how does this 5 trillion GDP come across? About 30% of this is contributed by 500 or 5,000 large enterprises and their supply chains. They contribute to more than 30% of this economy. And when we say this 5,000 large enterprises, now they take services from tons or plethora of MSMEs on one side, and in another side, using them to supply these goods to end consumers like you and me. So typically, MSMEs are the driving force in our country for us to even reach the 5 trillion goal. right? How do we get there, or what, now where does the fintech in this whole story play? So, sorry, just give me a minute. Yeah, this is where we are. So if you look at MSMEs as a space, again, they are highly disorganized, fragmented, and it's a huge market opportunity for any one of us, whether it's a software company, it's a manufacturing company, it's a students, it offers us a huge market opportunity. And if you look at money part or lending per se, 40% of these MSMEs is done through informal sector. Informal sector, when I say informal sector, they take money from the lenders who are like right next door or in my main road that they're staying in wherever they are, and the interest rates are twice as high as the market rate, which means their manufacturing cost or their sourcing cost naturally increases, because tomorrow, when they supply goods to one of these large corporates and you and I are consumers, all these add up to that. So ensuring that they get formal sector lending or lending at a better rate would be a good thing, because eventually it would ensure that uh, the end consumers like you and me get competitive, better quality products at a better price. And why is it so high for these MSMEs? Because probably they don't have the requisite documentation, they may not have the requisite balance sheets or balance sheets with the right credit worthiness, etc. And hence they can't even secure a formal loan, right? And so how do we get such a sector which is so underserved and which is such critical sector? I mean, everybody talks about it. It's so important. You see the mention of it in every other meeting, every other presentation. But how do we get them and get them to get proper credit, at the same time protecting the financier, which is the formal an NBFC or a banking channel or a fintech, so that the risk that they underwrite is not very high, because they look at it as a high segment or a high risky segment. How do we help them underwrite it better? That is one of the problems that faces when we want to lend to that sector, right? So these are the one or two main challenges. Having said that, I would like to spend some time on what we do as a Arteria, so that this will help set the context for you. I'll not talk too much about our product, so you don't need to worry on that. So we at Arteria are supply chain people. That's been our bread and butter for ages. And about 3 years back, ICICI as a bank uh, invested in us 20%. And I mean, with all due credit to the people there, while we were sitting on the supply chain, uh, we were not sure why a bank even wants to work with us. I mean, it's just that we were so narrow in what we were doing, and we were saying all through our discussions, it was supply chain, supply chain. How do you solve a supply chain problem? But we never bothered to worry about the money part of the story. And when they came in and they started working with us, we realized that if you offer integrated banking and lending services to supply chain, it solves a whole lot of issues. It suddenly gives uh, a lending a different flavor. Typically, when we go for any loan, whether it's a personal loan or a banking loan, the first question they ask is, okay, give me your last 3 years PAN, what you call the IT filings. You give me last 3 months bank account statement, your salary slips, your company salary letters, etc. And for a corporate, it just becomes that much more difficult. Last 3 years audited balance sheets, what are your where else you have loans, what are the other things you do, what kind of inventory do you hold? That's where the whole problem starts. And we actually sit on that inventory, because corporates, dealers, suppliers use us to order and sell their inventory. And with this knowledge of that, we said, why don't we kind of latch on to what is called as flow based lending? This is something which all of us talk, where when we say flow-based lending, you don't worry about my balance sheets or anything. I'm just going to buy a particular set of goods, and you pay my manufacturer, or you pay when I'm a dealer, you pay my manufacturer. If I'm a supplier, you ensure that I get easy credit just for this transaction. So how do you enable such a thing? So this is typically what we have ended up doing now. We do what we call as a flow-based lending on our platform on either sides of the supply chain. So whether it's a supplier or a dealer, we enable them to do flow-based lending. What would it mean for each one of us? I mean, this is something which you can really ignore. How are we allowing them to do that? And how do we enable that? That is an important aspect for you to know. So we have a transactional level data of, so today we cater to top almost 300 corporates in the country, which means all their supply chains use our software, which technically means that any supply chain member, either a supplier or dealer of this corporate, we can underwrite them so much more easily because we have access to the underlying transactional data, and corporates are very happy if we enable their supply chains to perform better by giving them lending, because it in a way de-risks the large corporate. If their supply chain is at risk, as you saw in the first slide, none of us today are operating in a disconnected world. If there is a problem in supply chain, it's going to impact each one of us. So corporates are more than happy if you're going to help their supply chains perform better, right? And we have all data right from borrowing behavior, or in case of dealers, it could be borrowing behavior. In case of suppliers, it's a quality of their, the supplies that they do, invoice level payments, every single thing that that is there to be written on a supply chain. We have access to it, and we use all this various technology platforms, which we call as AI or ML for prediction. And we have built in risk scoring engines, behavior analytics. All these help identify and automate the decision and underwrite any transaction that is happening. Apart from these internal sources of the data which use these technologies, we use various analytics, right from clickstream event data to demographics to KYC details to payment history to traditional channels, to essentially identify and tell the financier that, hey, you know what, you please underwrite this supplier. He may not have the right balance sheets, but here is the data that is helping you to make a better decision, and you can, your money is also not at risk. So this is something that we do today. And just to explain to you how these supply chains are built, so this gives you a real-time view of a world, just so that, if I just take the, we cater to about 11 verticals, and I have taken some customer examples that we have so that you understand how deeply entrenched their supply chains are, and the money needs attached to the supply chains naturally are. So if I look at across sectors, this is something which comes very naturally to all of us. If you look at FMCG as a sector, we almost cater to 5 million retailers there, which we know, okay, if I go to any mom and pop shop right next door, I will be able to buy a Zendu balm or a Britannia bread or a Gadi detergent. Gadi detergent is prevalent in northern part of the country, not as much in southern part, but yes, they'll also be catered to a lot of retail outlets. Each one of them have retail outlets that they serve, which run into millions. Consumer durables is again the same, but not as much as mom and pop stores. But through our corporates, we reach about 500,000 outlets. The mills are much more less. They operate through a lot less outlets. And again, if you look at tires or something, there's again a huge number. And Exide battery, you find it in every nook and corner of the country, or an Apollo tire or a JK tire. We are talking about a 1.5 lakh dealers here. But each one of it has a unique nature. Their money needs are different because their supply chains are different. It's not the other way around. If I'm a dealer in Britannia, my money need is different than being a dealer in Apollo, or being a supplier in Britannia and supplier in Apollo. So the unique nature of the money also changes based on my supply chain needs. And the nature of the supply chains also change very vastly. We cater to one of the top two Volvo globally, and there's another logo which I have not added here, which is probably the top two companies worldwide in terms of automotives. And you would be surprised to know that if their suppliers who are in Delhi and Gurgaon, they operate in Bangalore as well. They have suppliers in Gurgaon, they have suppliers in Pune, and they only carry inventory of 2 shifts, which means if my truck carrying inventory, which is coming from Pune or Gurgaon, reaches 1 shift late, my production line will come to a halt. And you'd be surprised to know they haven't, apart from the recent COVID-led crisis where there was a forced shutdown, they have never had to shut down the plant, which means the supply chains run so in such a coordinated manner that 2/3 of their inventory that they order is always on the road. So that's the kind of nature of supply chains which are running across these industries. And hence, for a supplier who's supplying to such a supply chain, the money needs vary. So how do we cater to that vis-a-vis to a FMCG supplier? If we don't understand the underlying supply chains, we'll never be able to cater to their money needs, because predominantly a bank has been looking at a Britannia dealer and an automotive dealer both through their balance sheets. While an automotive dealer will have a heavy balance sheet, this guy will not have. But it's a big chain to miss out on. So that is where we've come, and we said, to be able to lend based on transactions, you need to understand the supply chains first. Only then you can talk about your what I would say, how can you lend in that supply chain. And this is what we are today. We provide credit, we provide payment services, and we ensure that each corporate gets its own closed loop B2B supply chain and financial services marketplace. That's what, when we go to Britannia, we give them their own B2B supply chain and financial services marketplace, where their dealers can get credit, their suppliers can get credit, and the corporate can run its own closed loop supply chain in a very seamless and integrated manner. So any queries so far? Probably. Otherwise, I would like to point you to some of these resources which have been very useful. We understand that every university, everybody offers, courses on supply chain, but I found these to be very useful, thought-provoking. And Mark Miller, he works out of Singapore. He's been, whenever we need somebody to, I would say rather, push our ideas, get the feedback. He's worked all his life on supply chain. So we used to ping him, get that. There's another gentleman called Sangeet Paul, who is kind of called the platform guru. We also ping him. Then there is this website called Supply Chain Shaman, which is kind of a consulting firm run by a lady called Laura. She has also spent about 40-50 years on global supply chains. These are, apart from your regular, every other B school and college that is worth its salt today talks about supply chain. So you can always reach out to them for resources. But these are something which I thought would be very useful. And ISM World is a very interesting organization which actually helps professionals get certified, get access to resources, get access to everything on supply chain stories. And what are the typical jobs? Apart from what I've told you 5-10 minutes back, sourcing and procurement teams are always the main teams which look out for supply chain professionals. Same as logistics teams. But today, with this kind of shift in lending, the so-called financial supply chain teams of banks, trade finance teams of financial institutions are also looking at supply chain professionals. And there are tons and tons of software companies out there like us, which need professionals who have supply chain knowledge. Because today, getting a software professional is everybody, uh, who has done any engineering stream is trying to be a software professional. So, what we are telling is a business knowledge, uh, and then coming and supporting the software teams is a big gap area, which which is what we are kind of uh, pursuing, and which we a lot of us look forward to. So there are a whole lot of jobs if you're a supply chain, and that too, if you're a supply chain professional with knowledge on fintech, nothing to beat it then, because you that would be one of those unique skills that people would want to hire you for. So these are the typical job profiles.
Thanks, Sriram. This has been really helpful. Oh, perfect. Please go ahead.
Yeah, so this is just to end in it. This is some of our customer networks, commerce that flows to us, and then the tier one corporates that we serve today, which are, which are or tier one suppliers and distributors that we serve are more than 1 million. But if you look at tier two, tier three, it's just a blotted up number. It's a big number. So some of our sample customers are given here. Yeah, that's about it. I think any queries, I'll be more than happy to take the queries.
Sure, Sriram. No, thank you so much. And we've got a few coming in. Maybe I'll start with, like in the fintech space, we've also been exploring this with other sessions as well, where a key component of the fintech space is customer acquisition.
Right.
Particularly in financial services, that really defines the kind of products and services you can offer in terms of your cost of acquisition playing a pivotal role. I think that's a space that Arteria has really been able to innovate in and also allow for embedded financial services in the process. Could you maybe spend a couple of minutes talking through your strategy of how, like, what is the roadmap for you all? How did you all go about getting to the stage you're at right now with such an impressive, range and depth of digitized ecosystems of players that you usually are traditionally not easily accessible by traditional players?
Right. So, Avnish, for us, we've started looking, like I mentioned earlier on in my presentation, our the problem statement we were trying to solve was slightly different than what most of the fintech companies are trying to solve. The fintech company is coming and saying, okay, I'll digitize your process. I'll ensure that your lending happens much faster, right? So for us, the underlying problem statement was, how do we smoothen a supply chain? So once we have a smooth supply chain and access to it, then the fact that lending is just I mean, it's seamless. It's just an add-on on top of it for us. So I would, because we looked at the problem from a different perspective. So lending was very a natural extension to us. Now we're adding insurance. So we add multiple things because the problem we are trying to solve is slightly different than just saying, I will digitize your lending. So that's what helped us in this journey much early on.
No, that's really interesting. Like you said, you looked at the core problem to begin with. FS was a byproduct that fit in synergistically after you had already achieved the first core piece. You mapped it around. That's why you can also now cross sell, say, insurance and other products as well. Now that you've got the initial core need nailed down.
Right.
Um, but and so like, let's say the core need was to first digitize these supply chain ecosystems. So what was your strategy? How would you try and get economies of scale? Would you first focus on some big players with an established supply chain and use that, and then from there branch into different supply chains as well? How has been the if you could talk through the broad strategy you guys have tried to look at to maximize your reach.
Right. So I would always focus on one particular anchor supply chain, or any chain that if I were to just do it as a fintech, I would still identify one particular chain, one particular problem, solve it, and then add supply chains to it. Because when you want to grow and you want to grow fast, your base has to be appropriate. Otherwise, it's not about funding, it's not about growing, it's about ensuring that sustaining the growth beyond a couple of years. If you have to do that, the way to solve it, at least from whatever my experience says, the way to solve it is latch on to one chain, which is your sweet spot, whatever it is, wherever you can solve a problem better. Because every other place you can improve. It's not about only area A, area B. Latch on to the sweet spot of your solution, go the full hog there, and then look at the next chain. That would always be my recommendation if I were to do it.
Thanks, sir. I think that's really interesting. And in terms of a strategy, I'm sure the students on the call will also benefit from that perspective, that it has to be simple and focus on that core need and then build around that.
Right.
The next question, we also saw this in some of the pre-question sessions, is how did you go about with your innovation of your product offerings? Once you nail down your customer and able to acquire them, you also expanded in terms of your offerings to the base. What has been your process for innovation? How do you identify your insights? What is the role of technology there?
Okay. So we have the way we have solved the problem, Avnish, here has always been, we never looked at it as a technology product. We always said, okay, you want to have your roadmap for the next 3 years. Let's get top 3, top 5 of our customers, understand what their problems that they are going to solve in the next 2 to 3 years are. And for those problems, what kind of technologies can we use to resolve those problems? That's the way we always do our business exercise every year, trying to say, okay, next year, what are the 3, 5, 10 business problems I want to solve? And to solve those business problems, what are technologies we can use to resolve those problems? So we've always tried to take that approach, because at the end of the day, what the customer wants is a solution to his business problems. I mean, in some extremely rare cases, technology itself can be a end use if you're and that applies more if I'm a technology company building a platform and enabling other players. Otherwise, for most of us who are in the business world, solving business problems, identifying the problem and then applying the right technology is the key. So we do these exercises, workshops with top 3, top 5, and now we started going region-wise, saying in each of these regions in the country, we'll do this exercise with top 3, top 5 of our customers, and we co-innovate with them, and we solve their problems. And as a part of this whole process, our product gets better year on year.
That's really interesting, and I think that also ties in, the latest trend. Not the latest; it's been happening for a while, but there's always a debate around the being a product versus being a platform. And a platform play each has its own advantages, and a platform allows you to meet the larger needs of an ecosystem by, say, partnering with other players. Is that a strategy that you're also looking at, or do you see a distinction how you're doing it?
Yeah, so we in fact came from one more world earlier, Avnish here. So we came from being a services company to a product company to a platform. So see, as a platform, if you want to offer, so there are multiple. I mean, the platform is one of the most used and misused words as well in today's date. But as such, the definition of a platform is anything that helps you scale multi-tier. And this, like I mentioned, my good friend Sangeet Paul from, he's the platform guru. But essentially, in his words, if I have to quote, it is nothing but which enables corporates, it could be anybody, trying to sell goods in, I mean, the incremental benefit is much higher. And you see that any platform that comes can come to the market and disrupt the existing play that is there, which means I am able to do the things much faster and with at a much faster pace and get more market penetration at a much faster pace. That is how we would define a platform. So a product which can have multiple or a platform can have multiple components in it, and this could be some other platforms or some other products, it doesn't matter. But technically, if you ask me, going forward, a collection of products and platforms or a network of networks is the way I see the world is going to operate. It's not going to be one single platform or one single product. It's a integration at various platforms and various products, which is going to offer one final customer experience. So both are critical in that sense, and integration is the key, and interoperability is the key.
I think that's really valuable. Yeah, in terms of ensuring that something is relevant, that interoperability is a really integral part of that whole experience for people to adopt such a platform. So yeah, that is really that. There was another question here, which is along the lines of what is the role of AI/ML, in the whole problems that you're solving and the whole supply chain management that you're looking at. What is the role of analytics? And I'll also use that as a segue to go back. I know you already started talking about skill sets, but from a skill perspective also, how important is such capabilities when it comes to this sector?
So I would say it's absolutely important in terms of the skills and technologies, specifically in this sector or any sector for that matter today. The reason is pretty simple. Okay, I'll just give you a real life example so that you understand it. So I'm just again taking, because we've used a couple of names here. Let's say we work with Britannia, and they are telling, they sell, they're probably the country's largest player in their segment. They are the number one. So if I were to let's say they have one brand called Tiger Biscuits. I think most of us know that. They sell Tiger Biscuits across the country, and if I were to know that in a particular area, I'm selling, all my stocks of uh, Tiger Biscuits, which are 5 rupees packs, are getting empty. So why can't I fill it with a 10 rupee biscuit packet? Because people are wanting more. Now, for you and me, without proper analysis and proper amount of AI/ML technologies applied here, it sounds very logical, right? I mean, the 5 rupee biscuit packets are getting over, so let me fill it up with 10 rupee biscuit packets. But when we applied some of these logic and algorithms, we've realized that most of these are getting done or getting empty across, wherever there are schools next to it, because probably the kids have pocket money for 5 rupees or 10 rupees or less than that. Now, if I were just to blindly go and say replace it and say, you know what, I'll do that, it would be loss of sale for us, right? So the idea is this machine learning, AI, all these are the tools that would or the technologies that would help businesses uh, going forward improve the way they do business, get more out of the same thing, and optimize their costs, optimize their supply chains, etc. So these two technologies, or for that matter, we broadly use these in along with the term called big data and analytics. All these are the technologies that would drive the careers from a tomorrow standpoint.
Sriram, I'm going to continue on that, and also, I know you covered it a bit, but also bring it back a little more, because we firstly focus on that for the next couple of minutes before we close it. I'm also conscious of time. From a career perspective and from a skill perspective, like what are the primary roles that you see in the space you're in, given it's a B2B kind of play? Um, what are the primary, or do you still have the same skill sets needed for, say, B2B sales as you would say for the more, you know, typical B2C sales cycles? What are the product teams? What would be your capabilities there? Could you just run through that a bit?
So,
Maybe the top 2, 3 roles you see.
Avnish, I'm sorry, I couldn't hear that clearly. It was slightly jarring. Do you mind repeating that?
Sure, sure. I'm sorry about that. Is this audible now?
Yeah, let me also. Yeah, it's slightly better. Yeah.
Okay, yeah. Now, I was just going to say that, towards one of the last pieces we should touch upon during these sessions is the skills and career opportunity side. And you had already touched upon that in your presentation, but just wanted to get your sense of a piece. Given this is a B2B space, and so far we've heard from quite a few B2C fintechs, but it's also interesting to hear from your perspective on what are the 2 or 3 standard roles that you see in the sector, and what are the kinds of skill sets of it, be it, say, across the entire life cycle of sales, product, risk, and so on and so forth. What are the primary roles you guys look at, and the 2, 3 major skill sets? You've already touched upon the importance of, say, analytics, but if you
Right.
could you talk through some other.
Right. So we predominantly look at two things, Avnish here, and I am assuming most of my industry colleagues would do the same. While the technology knowledge like AI, ML, and some amount of knowledge on that is good to have, we don't expect anybody who's passing out to be an expert in that. But any knowledge that they have on these technologies, but most importantly, the business side of the knowledge on, how does a lending work, or how does a supply chain work, and etc. That knowledge is something which we see for, because that would help kickstart and ensure that they get into the mainstream much faster, into the other colleagues. That training is that much more easier if people are aware of that.
Fantastic. And so, as you're saying, it's almost like a honing of skills, and particularly in a startup environment, you also see certain needs for flexibility and innovation, a certain level of thinking.
Right.
Thank you so much. I think that really helps in terms of setting a context, because the typical questions we do get is, how important is, say, technical skills versus functional skills in the fintech space. And generally we've seen that while technology skills are always important, like you mentioned, also having that understanding of functional business models, and then being able to apply that knowledge is also equally important when it comes to innovation. Lastly, just to also get put on your entrepreneurial hat and just go back to how you started this whole journey. And usually we cater to a number of students who have an entrepreneurial flair themselves. Any advice on how they should go about doing things, or any advice on how your journey has taken place?
Yeah, so my only advice would be identify an area, and don't come under the fear of somebody is doing this, somebody is doing that. You have your own strengths, so focus on your strengths, and ensure that you give your 200% to that. That's all I would say. So each individual may have their own strengths, but they should focus on that. And once they focus, they have their plan in place. I wouldn't spend too much time on a business plan. Having said that, I'm not saying you shouldn't have a business plan. You should have a plan. You should have a strategy for sure in place, and a plan in place. But most important is equally important would be the execution capabilities, and then persistence to get it through. These are all very critical than just having a great plan. So ensure that you spend enough time on these 3, 4 areas and focus on your core strengths.
Fantastic. No, I think that's great advice, and thank you so much. We'll probably use that as our concluding remarks. Sriram, really appreciate your time today to spend time with our students and provide such an interesting perspective, not just on the industry but also on areas that the students should focus on. And thank you to all the students who attended. It's been a while since we had this. Apologies for some of the technical glitches for some of you while you were joining, but really happy to see you all again and hear your questions. Read your questions and see the enthusiasm that we've gotten used to seeing. Pratik, I don't know if you'll be able to pull up that slide again, but if you from the students, if you have any further suggestions on how we could run this, who you'd like to listen to, what kinds of sessions you want to hear about, please feel free to write into us. You can reach us at admin@fintecheducation.com, and we'll be happy to take your suggestions. I think Pratik is just bring up the slide one more time. But otherwise, once again, Sriram, thank you so much, and have a great day, everybody.
Thank you all. Have a wonderful day. Stay safe.
Thank you. Bye-bye.